Welcome to another Morgan's Edward Street Wrap for Friday the 20th of October. 30 years ago yesterday, the ASX witnessed Black Tuesday, which saw the market drop 25% on open. By the end of October in 1987, the ASX was off a whopping 42%. There is much conjecture in the press which is trying to connect the dots between now and then. Are we in for another cataclysmic crash? Well, according to our economist Michael Knox, he would argue not. Based on his model of the ASX 200, which uses operating earnings and bond yields at its core, he thinks fair value at the moment sits at around 6,100 points. The other big news this week is the beginning of China's 19th National Congress of the Communist Party in Beijing. President Xi is seen as one of China's most powerful leaders. Whether he extends for an historic third term or passes the baton on to powerful allies within the Politburo remains to be seen. The reduction of massive debt levels of state-owned assets, a crackdown of corruption, and a move to stem pollution are all headline topics that will be covered over the next week. Please note that comments in this video are general in nature, and please speak to your Edward Street advisor if you wish to know if any of the stock recommendations suit your personal needs and objectives. I'll now pass over to Matt for his summary. Matt?
Thanks, Brad. What a week for our market. I mentioned last Friday that we needed to watch the 5,800 level closely as a breakout was imminent, and now we have witnessed 7 straight up days leading into today, with the market pushing above 5,900 points, aiming for the big 6,000. In the US, the Dow Jones again reached record-breaking highs, touching 23,000 points for the first time on Wednesday, as the Trump factor continues to boost the index with the proposed corporate tax rate cuts, which are now heavily baked into their market. Commodities have had a mixed week, with copper and oil having positive gains, but iron ore and gold have been a touch weaker. The Aussie dollar trades around 78.5 cents today. I mentioned last week that the small names were leading the market, and the trend has continued with some excellent gains from our house stocks, including IPH, Megaport, Apollo Tourism, and Bapcor, to name a few. Thankfully, the good news is spreading to the bigger end of town, with the major banks all having a good week, and CBA is almost back to $80 after spending a few months in the sin bin due to the AusTrack scandal. However, the big miners have had a couple of sellings, with Rio under the microscope from the US regulators for a sour deal involving Riversdale 7 years ago. Over the coming weeks, it will pay to keep an eye on upcoming annual general meetings for company-specific information. I'm personally interested to see what Myer comes up with on the 1st of November, given the chairman is already being replaced and maybe a few more scalps to follow, thanks to the heat coming from major shareholder Solomon Lew. Thanks, Brad.
Thanks, Matt. On my left we have Cameron Mole, as usual, who will run through his key buy for the week. Cam?
Thanks, Brad. Today my stock is Baby Bunting, ticker code BBN. The baby goods market currently operates in a $2.4 Australian billion industry, and as the gents beside me will tell you, these babies are expensive. Whilst the space is very opportunistic, there is significant competition in the industry, which is set to excel as Amazon plans its arrival. The domestic baby goods industry has already seen increasing competition and has caused many chains to fold over the years. Some of these include Bubs, Mothercare, and My Baby Warehouse. We expect this thematic will continue and perhaps even intensify as the likes of Baby Bunting builds additional scale and leverages the resulting supply power. We expect the failure of competitors to provide 2 clear opportunities for Baby Bunting. Firstly, to win market share following the competitive closure, and secondly, to take over some of the available leases where Baby Bunting does not have a presence. It's safe to say over time, we expect Baby Bunting to be the main long-standing physical retailer in the baby goods space. Now, whilst Amazon targets our domestic market, we still believe that parents will still demand a brick and mortar presence to ensure that they are buying quality and the product is suitable for little William or young Ursula. The share price has been in a downward spiral from August 2016, off highs $3.17 to its current value of $1.66. Whilst we've seen dramatic falls, we believe there is still some heartache for investors as liquidation from previous competitors looks to further disrupt markets over the shorter term. As such, I'd be putting this one on the watch list and recommending clients to accumulate on further weakness. Thanks, Brad.
Thanks, Cam. Just following on regarding the retail sector, our analyst Joe Little put out a comprehensive piece this morning covering all the stocks mentioned above. If you'd like a copy, please ask your Edward Street advisor for some light weekend reading. That's it for another wrap. Please feel free to share this video with your colleagues, friends and family, maybe William and Ursula. And make sure they like the Morgan's Edward Street stockbroking page, Facebook page, and also subscribe to the YouTube channel below. Have a great weekend. We'll see you next week.